the next thing, I guess, is Tesla, latest full self-driving, the button coming out. We actually had a great interview earlier with Chuck Cook on his testing. We'll be releasing, it was a recorded interview. It's our first kind of recorded interview, and we'll release that probably tomorrow, I would think. But that was really insightful. The button is coming up in a few days, and the newest release 10.1 will come out. I guess the revealing of Tesla insurance kind of functionality here. There's a lot to talk about here. What are your thoughts? Do you think it's going to raise a lot of eyebrows, or is it going to cause scrutiny by the public or regulators, or are people going to praise it? What do you think about this?
Yeah. I think it'll probably raise scrutiny, both good and bad. Because we know people who've been watching these beta videos that it's not perfect, that it still makes mistakes, but we understand what they're doing and why, and we can kind of see the bigger picture of improved safety and wanting to get real world cases to kind of improve the training. And so you're kind of willing to accept some of these quote unquote higher risk. It's actually not higher risk if you look at the data, but the need to intervene. But I think when you're broadening it out to a bigger group, there's going to be some people who potentially are not as diligent as the current kind of crop of beta testers are. And then I think you're definitely going to see a lot of kind of media headlines of, oh, look at this, Tesla was trying to turn into oncoming traffic, or like Galley's video where it was trying to like slam into a monorail pole. Like you're going to have, we know that these instances will be out there. They're going to be put on YouTube for anyone to see. And the media is probably going to make the worst of them. So that's kind of raising eyebrows on the bad side. But I think on the flip side, normal people who are just have more exposure to this, just like I can imagine friends and family that I show this to once it goes live, who don't know that Tesla's doing this right now. I would imagine they're going to have their minds blown. So I think it could be a catalyst depending on how good it is. But even if it's just kind of the current beta suite that's out there, I think it's the type of thing that will make a broader set of the population way more interested in Tesla in general, and potentially wanting to order one. So overall, I'm definitely excited for it, and I can't wait to download the button. I already put my car in chill mode, which killed a small part of me to do it, but I want my safety score nice and high.
Yeah, I'm curious. Mine in chill mode too, so I don't drive.
Are you fast. Even interested? Because you've made some comments in the past that you're not sure you'd want to trust it. What's your thought on actually being a beta tester?
I go back and forth. Like, I don't want to be one of the early beta testers just because I don't trust myself. Like I've learned to rely on it too quickly. I feel like the autopilot, and I have kids in the car a lot. I'm like, I put it on autopilot and I yell at them or say, stop hitting your brother or whatever it is, But if I'm driving and it's not an autopilot, then I won't do that. I'll just like be looking forward and I'll be like, I won't focus on the road. So I'm kind of worried that like, what if I start getting somewhat complacent or comfortable with it. I put it on, even though I'm watching it, I still think it's safe, and I get distracted and I am in a neighborhood road and I turn back and then bam, hit something, so I'm just a little hesitant. I probably will do it just because I paid for it and I want to just get it and start using it. But I have to be really cognizant myself to like not get complacent, even when there's like lots of distractions in the car or whatever. Like I have to just be vigilant on still paying attention. Think of it as like an extra backseat driver that's actually driving, that I'm controlling or helping to control. But I think it'll do a lot of good. I think there's going to be statistically much safer driving, and it'll be shown pretty quickly with this. But like you said, there's going to be lots of media scrutiny to the first accident. We've talked about this many times, and I think before even an actual like accident, there's probably going to be some YouTuber or someone looking for exposure on TikTok or whatever, trying to trick the system and get into like some kind of minor fender bender accident that they think can go viral, that can get them a little more famous or something, So I think you might see some of that. I think that's going on in China to some degree, but with some of the past PR issues in China. So, it's a whole new kind of wave of technology, and it opens itself up to lots of, criticism, and people are going to be watching every headline regarding it, especially if they see the word crash in the headline or fire, in Tesla. So
Yeah, it's unfortunate that that's kind of the world that we're in right now, but I think does create opportunity. I think net it's going to be more of a positive,
yeah,
especially if this EV tax credit comes through. I would imagine this is going to do great things for the take rate, and people have to remember that the subscription is an option for FSD now. So you've got that potential for not only for new customers, but for the over 1 million units of existing kind of worldwide fleet that doesn't have this, that doesn't have the FSD purchase. Some portion of those will opt to subscribe, and so that's going to be a boon to the financials. The other piece will be probably in Q4. This will be allow for full recognition, at least in the US, of that FSD deferred revenue balance, and so that'll be a one-time benefit financially, but also they'll have greater margins going forward, because rather than keeping roughly, let's call it, of the $10,000 purchase price, they were deferring $5,000. Well, now they'll be able to recognize the full 10,000 on every sale going forward. So probably in Q4, like I said, but I think that in combination with just greater awareness will create a lot of, I think, good news financially for Tesla in the coming quarters.
Sure. Yeah, and Tesla Insurance, this new automatic tracking. It's going to be really interesting to see how that kind of is facilitated in evaluating whether to approve someone or not. Like, what's the rate going to be? Is it going to be like 50% of people that apply are not going to make the cut, or is it going to be like 5% of people that apply don't make the cut? I have no idea. We'll find out soon.
Yeah, I don't know. I would imagine they're going to be more strict at first, but at the same time, it's only 7 days of of driving history. So I'm kind of curious how important is that going to be, and how much are people going to try to kind of game that system, and also even what are the criteria? Because I've heard some of the beta testers say that if you get that blue screen that says you need to put your hands on the wheel, that can negatively affect your insurance score, which I don't know if that's true or not. I don't think anyone really does, but is getting a drag on your safety? Because there's plenty of times I'm paying complete attention and I don't even notice sometimes the blue screen because I'm looking at out the windshield. So I'm very curious to see how they roll this out. I think it's going to raise a lot of questions and hopefully provide some answers too.
Yeah. So I think we covered most of the topics. Anything else Tesla related before we go to the Q&A, or I think that's most of it?
No, I'm definitely looking forward to the Q3 deliveries coming out in 10 days or so. So we'll be keeping a close eye on that. It seems like it's probably going to be another record quarter. I think the one thing I'm a little bit unsure how I feel about is for Q4 is the potential deferral of the EV tax credit until January 1st. I think that's the way the proposed bill was written. Will that cause like a sequential decline in U.S. deliveries in Q4, which would then kind of just pile up for Q1? That's, maybe I'm getting a little ahead of myself. Most people probably aren't that concerned about it right now, but I am kind of wondering that there seems ample evidence of a very large amount of U.S. demand right now. But I'm curious if a chunk of that drops off temporarily.
I think the U.S. is already sold out, right? The U.S. is already sold out for all of Q4, supposedly. But a lot of people might defer their deliveries till January 1st because they want to get that credit. Tesla could offset that and say anyone who takes delivery January 1st or later has to pay an extra $5,000 or something. But I'm not sure.
I'm not sure they could do that. So my brother falls in this category. He ordered a Model 3. I want to say it was 2 months ago. Maybe it was 1 month ago. I think the initial delivery window they gave him was like November. They actually gave him an option to take delivery 2 or 3 weeks ago. He decided just to wait to see how this tax credit thing pans out. So I'd imagine there's lots of people who are having the same conversation with themselves of, oh, I really want the car, but I don't know, probably want the $8,000 or $12,000 more than I want the car itself. So it'll just be interesting to see how it pans out. But it's honestly just a short-term issue, I think. I think
keep an eye on. It'll be offset in Q1 with like double deliveries in Q1, and investors will have to digest how this is playing out. But I think, the market will figure it out. It's short-term looking, but not too short-term where it won't realize, maybe this discrepancy so much. It might create a bump or some temporary volatility in the stock for a short time, but I don't think it'll be a huge impact, but it'll be interesting to see.
Yeah, I don't think so either. But me as a financial modeling nerd, I just love thinking, okay, you've got potentially $1 billion of deferred FSD revenue recognition, so you got to like count that in. But then maybe deliveries are down a little bit because of the
Yeah.
U.S. But then Q1's huge, so I
Maybe they
probably
can just
like
focus
to.
on deliveries outside the US. Maybe there's enough demand. They can just ship a ton of deliveries from Fremont again out to like Europe and Asia or different countries in Asia
It
that
would
are
have to
not
be
China.
left-hand drive countries only, but yeah, that's potentially an option. I know they're trying to use China as an export hub now, but so a lot of the European deliveries, which used to come from Fremont, are now really being satisfied from China. But yeah, it's possible, but I would imagine there's some production changes that they would need to make because there are some of those regional differences, but we'll see.
Maybe they're making those
Right
changes now.
now,
Yeah, I mean, they must be anticipating this stuff and know a bunch of options. So,
I'm sure they are. I'm sure they are. But yeah, why don't we get into.
how would you invest in Tesla right now? Selling put leaps, buying call leaps, or simply stock? Well, I know we've talked publicly a bunch of times about our big kind of Tesla bet. We converted most of our shares in the end of the first quarter of this year to long-term put leaps that we sold deep in the money. So if you want to go to the earlier videos on that, we've kind of talked about that. And I've talked about it on some of Dave Lee's channels, our kind of methodology around that. But we sold, a bunch of June 2022 1,000 strike. It was June 2023. I'm sorry, 1,000 strike put leaps in Tesla for around $500. Back when Tesla was like $6 or $6.50 a share. And so we sold shares for that and converted, for every 100 shares, we converted to like 2.5 of those puts or something like that. So we felt there was a good risk reward, given that we're pretty confident Tesla will be way above $500 a share by 2023 June, but most likely above $1,000 a share by then too. So yeah, we like that trade. You have to be patient, but if you do the math, I think we did the math on the capital we committed. It was like a 67% per year return for 2 years in a row or something like that. So we're pretty happy with that for that segment of capital. But you have to be patient. Sometimes it's fun to place trades or short-term trades. And what if Tesla gets to $2,000 or $5,000 a share, like with full self-driving robo-taxis, like all really happening really quickly or something? Yeah, then you miss out on some of that, but you still have that 67% return for 2 years in a row, which is we like that. Buying the call leaps, there's pros and cons. It depends on how fast you think the robo-taxi rollout or full self-driving takes. I think enough people opt into full self-driving where it really increases the margins on Tesla. I think is a big factor in that, right, Matt? And then that comes along with that more anticipation to the robo-taxi. And what do you think, Matt?
Yeah. I mean, we'll probably do a financial modeling episode for Q3 like we did during Q2 ahead of earnings. But some of the modeling I've been doing right now just is showing it's going to be very hard, I think, for Tesla to have auto gross margins lower than 30% or so, as long as FSD is fully recognizable and there's some modest take rate. Right now, I think I'm projecting them to be around 15% or so, which is historically very low. So you can imagine as that capability rolls out to other geographies, Tesla's going to potentially have a lot higher take rate if it really is impressive. So I mean that can just give Tesla a ton of optionality. They could either, if they're really supply constrained, they can just keep prices high and maybe have like 35% gross margins. Or they can continue to lower prices and expand capacity and maintain like 25 to 30% auto gross margins, even while reaching cost parity with internal combustion engine vehicles. So in my mind, there's just a lot of good financial news coming forward that I think most analysts. I've looked at a lot of analysts, the financial models that they are putting out there. And there's only one that I'm aware of on Wall Street who is actually modeling out full self-driving appropriately, as I would call it. Not even saying that they have aggressive assumptions, but just actually taking the time to calculate how much is deferred, how much will be recognized going forward, and then modeling out take rates and modeling FSD separately from just the pure hardware gross margins. I think that is the only way to do it, but for some reason, nobody takes the time to do it. So I think getting back to Alex's original question, I'm not sure that I'd want to sell those same puts today at today's prices, given some of the risk reward. So, but calls are also kind of expensive too. I think you have to have a view on autonomy and FSD if you want to play calls.
Yeah. Yeah. It's kind of like in this middle gray area where we don't really feel too strongly one way or the other on either option. And we do feel like holding the stock is like the safest option right now.
Yep.
From Ben Rabstar, do you think a credit rating increase to investment grade is imminent, and what would be the impact? What would the impact be? A lot of institutional buying. I do think it's imminent. I don't know how soon, whether it's the next few months or a year or two away, but it's obvious to me that the credit rating is going to be upgraded. I just don't know when. What have you thought about this much, Matt?
Yeah, it's crazy that it's not already investment grade. I mean, they have a much higher cash balance than they do have outstanding debt. I mean, they have $2 billion plus of operating cash flow every quarter. Like they've got this pristine balance sheet that is like the envy of any other automotive company. But for some reason, these rating agencies are just asleep at the wheel. It's like, well, I need 2 years worth of proof that you've got more cash on hand than debt outstanding. It's like any reasonable person, I think, looking at this, in a neutral manner would say, okay, whatever you like about Tesla or don't like, their balance sheet is immaculate and their cash flow generation has been outstanding since late 2019. So it's kind of crazy to me that this hasn't happened. I think it will happen. I wouldn't be surprised if it happens in Q4. You get one more set of financials to print, and then I think you have a credit rating increase. But yeah, I do think there potentially could be some institutional buying. I mean, there are some institutions who will not buy quote unquote risky stocks, and a lot of times one of the risk factors that they look at is the credit rating on the debt. So that I don't think it's going to be any sort of huge tsunami of buying coming in, but it'll be another kind of positive catalyst. Wouldn't surprise me if it goes up 4 or 5% on that news whenever it drops.
Yeah, it's possible for sure that it goes up. Yeah, there are certainly rules that some of these passive funds are written in to follow, and one of those rules might be like only invest in indexed stocks that have a rating higher than X, and once Tesla passes it triggers something to cause that index fund to start buying it, for example.
Yeah.
Next, by Hoops How on Twitter, by 2023, could Tesla price a $25,000 car with $8,000 in tax incentives in a way that consumers will only pay $17,000? I think certainly, yeah. I think certainly 2023 would be aggressive. I'd say more like 2024. That would be more realistic in my opinion. I think they maybe unveil it end of 2022 or early 2023 or something like that. The model, whatever they're going to call this, the Model 2, some people are throwing the Model Q, whatever you want to call it.
The Tesla version. Q, not the Model Q, the Tesla Q.
Yeah, the Tesla Q. Yeah. I mean, I think 2025 for sure by then, but my 50-50 over under would be 2024, end of 2024, when it gets unveiled. And yeah, the demand is just going to be out of this world for that car. And the robo-taxi or the full self-driving capability will be an additional subscription of, I think, maybe $200 a month or $100 a month, or whatever Tesla charges. But I think most of Tesla's full self-driving might move to subscription-based going forward at some point, I think. And that will be a nice reoccurring revenue stream for Tesla for every car it sells too. What do you think?
Yeah, I think you're right. I mean, the tricky thing with this is, like, if you think of a $25,000 car, and let's say by that time Tesla has increased the price of FSD to $15,000, like you're going to price out that segment of the population which you were trying to attract with that $25,000 car. So I think you're right, Emmet, that may be the hardware price, but you do need some sort of subscription for FSD, I think, to really take advantage of that. I think a lot of this is going to depend on whether robo-taxis are economic reality or not. Because you could imagine if that's the case, then Tesla may not want to sell a $25,000 car, and even if they make, say, $5,000 of margin on the hardware, it may be well, it would certainly be beneficial to them to prioritize customers who are going to operate a robotaxi, or to operate that robotaxi themselves in their own fleet. But that's all moot if they don't actually have that capability. So from my perspective, it's going to be huge variances in potential outcome whenever Tesla does get to that point of having a $25,000 car. I mean, you could imagine them having a small margin on the hardware, and maybe some percentage will subscribe to FSD, or you could just imagine like massive margins and then ongoing robotaxi margins on top of that. So this is where I kind of get into binary thinking and like a decision tree analysis of where Tesla's going to be when I start thinking out that far.
All right. Next question from WSW1171 on Twitter. Thoughts on Tesla's full self-driving vehicles being the only vehicles allowed to use Boring Company tunnel systems? Yeah, my recent interview with Warren Redlick, he talked up the Boring Company, very strongly, and I see his vision. I do think there's a lot of potential for the Boring Company, but I think it's a long ways off. I think it's going to be many years before the Boring Company is really massively adopted. The scale it needs to be with governments and whatever municipal, all different types of governments kind of have to all collaborate, come to an agreement and cooperate for these Boring Company tunnels to be struck, the deals to be struck, and building them, and it just a lot of hoops, a lot of red tape to jump through to get one Boring Company tunnel, built. I think so. I think by the time the Boring Company tunnel system is built out, if it gets built out, there's probably going to be more than Tesla full self-driving vehicles, and it would be available to all of them, is my guess. But that, I think the Boring Company could be 10 years out before it's like massively, before we really are like, wow, there's some great tunnels between, major cities that you can use the Boring Company for. So what are your thoughts, Matt?
Yeah, just on this question in particular, I think obviously it has to be an electric vehicle, because I don't think the Boring Company has ventilation to allow like an internal combustion engine vehicle that's spewing out CO2 to operate. So you definitely don't want that. And then I think you're left with, okay, what other electric vehicles are there out there? So maybe you could have like a Mach-E with like Blue Cruise, but even that has issues right now on handling tight curves. So I think really Teslas are the only ones that are capable of meeting the specifications of the Boring Company. Obviously, you've got Elon's involvement, which probably creates some preference for Teslas anyways. Maybe they'll expand that out in the future, but I don't know what vehicle would reasonably replace the Teslas. I guess you do have a safety driver now, so technically you could just use any electric vehicle, maybe not a Bolt. You don't want to put one of those down there lest it burst into flames. But you could have any electric vehicle since it's driven by a driver. But I know the long-term goal is to get drivers out anyways and kind of automate that with the autopilot system, which seems like that would just be that's the better way to go long-term, I would think.
Yeah, I see a comment here from Chuck Cook actually.